Everyone, welcome back to the next segment of today's seminar, the panel discussion. For this segment, let us now welcome on stage, seated from your right to left, Mr. Sam Ee Long, Mr. P.K. Basu, Ms. Anna Chan, Associate Professor Simon Poh, and Mr. Ramchan Chaktiani. Members of the audience who have questions to ask the panel may make use of the standing microphones located at both sides of the auditorium. But for now, let us put our hands together to welcome the panelists on stage.
Thank you, Winston, and thank you very much, ladies and gentlemen. A very warm welcome to our panelists here this afternoon, who are spending time to share their views, opinions, and other inputs about the budget. There are only two people I know of in Singapore who can speak very candidly, very frankly, and very freely about the government, about the ministers, about the PAP. One of them is Jack Neo. The other one is in front of you, Mr. Sam Ee Long. And I'm sure we all enjoyed his presentation on the budget and his comments on the government and the PAPC and the PAP and the ministers and what have you. Now, just to warm things up, I'm sure a lot of you have questions. I thought I'd ask a very general question right up front of our panel, and before we invite questions from the floor, so that at least everyone up on stage is warmed up properly. Now, the theme of this year's budget has been to boost and enhance productivity, promote innovation, encourage the growth of globally competitive companies in Singapore, and also to help workers to upgrade themselves. And of course, the last bit is about having an all-inclusive element in the budget. Last year, the focus was, of course, on preserving jobs, providing or boosting the funding, improving bank lending, sharing the risk for banks in order to enhance cash flow for businesses, because last year was the year of the Great Recession. Now, gentlemen and lady, what are your views and what do you think are the most notable aspects of the budget, and in your view, has it covered most of the aspects that need to be covered? Perhaps I could start off with Simon on my left here.
I think clearly some of the incentives are very innovative and very interesting, and something which businesses are looking forward to. Schemes like the PIC, schemes like the M&A allowance. On the other hand, I believe businesses are not looking forward to the LIA, the land intensification allowance, except to the extent that they belong to the one of the 9 sectors. So clearly, these are the areas which are, probably more interesting, and also not forgetting the angel investors. These are by and large the 3 new schemes.
I guess the focus for this year is really largely on productivity and innovation. Companies will really need to be more deliberate in how they are planning, because indeed the deductions are quite generous. As what Ee Long says, there is also beyond the 250% deduction, there's still the 14E, whereby it says 200% deduction, but only on approved projects, which is administered as an incentive. So I guess overall, on the whole, I think the focus on boosting productivity and innovation is something that we really need to go forward. And I think from EDB's perspective, we also want to enhance Singapore's growth and sustainability through making Singapore competitive as a home for business activities, a home for innovation, and a home for talent. So a lot of the initiatives this year, I hope, would also set us in the right direction going forward. That's all.
Well, from a macroeconomic perspective, the thing that economists look for in a budget is what is happening to the fiscal stimulus. Is there a balanced budget? Is there going to be some stimulus, or is there going to be a contractionary impact from the budget? Remember last year there was supposed to be a fiscal deficit in the years between April 1st, 2009 and March 31st, 2010, there was supposed to be a deficit of about 6% of GDP. The actual outcome through the first 9 months of the fiscal year was in fact still a surplus of 1.7 billion Sing dollars. Now, Singapore finance ministers are always conservative in estimating the fiscal balance, but this was a remarkable outcome. I mean, projecting a deficit of 6% and coming up with, in fact, still a surplus to the first 9 months. Now, partly this happens because taxes, income and corporate taxes are paid in arrears. So when you have a strong year, the following year, incomes both for individuals and corporates are higher, and consequently revenue for the government the following year is higher. Now, there were a lot of questions about why there was no income tax rebate, no reduction in personal or corporate tax rates this year. And I think the answer is simple. This year, automatically, we are going to get a lagged fiscal stimulus because, in effect, the personal and corporate income tax payments will be a lot lower this year, arising from the fact that incomes for both corporates especially as well as individuals were substantially lower in 2009. And so you get an automatic fiscal stimulus this year, and especially I'd say over the first 6 to 9 months. The other aspect, of course, I think is the aim of boosting productivity and innovation over time, which is absolutely a worthy goal, and one that involves sacrifices to some degree on the part of businesses, particularly businesses that use a lot of foreign workers. So there's going to be an increase in the foreign worker levy, but a very modest increase, slow increase over time. And my line about Singapore is that Singapore has an extremely flexible labor market. I'd say the most flexible labor market in the world by far. Economists like flexible labor markets because they give a lot of opportunity for unemployment to go up and down without really seeing it so much in the numbers. And the safety valve, actually, of the labor market in Singapore is foreign workers. When the going gets tough, foreign workers get going. And so the first safety valve is foreign workers. And what is remarkable, if you look at the last 10 years, average annual growth in the labor force in Singapore was about 6 to 7% a year. Actually, net employment was increasing about 6 to 7% a year for the last 10 years. Singapore's organic labor force growth is about 1% a year, or a little less than 1%. So foreign workers actually augment the labor force by as much as 5% on average each year. And that, of course, enables the economy to grow a lot faster, even without too much productivity growth. Over the next 10 years, I think the EDB in particular has succeeded in getting in a lot of investment spending or investment commitments, especially in the petrochemicals area. And petrochemicals and electronics are the two areas where there's been a lot of investment commitments. Those are naturally areas where productivity growth is going to be a lot stronger. So I'd say for the next 3 or 4 years, productivity is going to be leading Singapore's growth. There'll be much less need for foreign workers because the construction boom of the last 3 or 4 years to build out the 2 IRs is basically done. Construction is not a very productive sector. Productivity is relatively low. It uses primarily foreign workers. So at least for the next 3 years, there's going to be an automatic improvement in productivity. I'm very bullish about growth prospects this year and over the next 2 or 3 years. I'd say real GDP should be growing a little over 7% in Singapore this year. We have a very strong recovery on its way. And it's led, of course, by global demand, but also by the fact that there's this lagged fiscal stimulus. But the incentives, the PIC incentives, I think will provide the wherewithal for the next leg of growth subsequent to the next 3 years as we need to continue the productivity-led growth. I think that this budget provides the wherewithal and the framework for productivity to become the basis for growth over the next decade.
Well, a lot of my friends and clients ask me